Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 13th of July here in 2021, and we are planning for a pullback. We've been planning for little pullbacks for a while, but they are short-term scalps against the prevailing trend. They work on the short-term basis. They are the highest probability play at the moment, and that's based on how trends unfold. In an uptrend, we have higher highs, higher lows, higher highs, higher lows. This is the S&P futures, by the way. Higher high, higher low. A little bit of a sneak to the downside, but then all the way to a new high. Keep in mind, every single one of these is new 52-week highs. We have a swing down. That's a pullback. We have a continued upswing rally. I think that's kind of similar to what's happening now. This pullback took a while, but did occur. And then we had another new high, a pullback, and where are we now? On the cusp of a pullback. And that's just looking at the market where we are. And again, these evening videos here in TheoTrade are just to get us on the right side of price action and put trades for the immediate future. And I cannot, in good consciousness, tell anybody to get long at these highs. That would be heresy. So what do? You have two options. Wait for the pullback. If you want to join the trend, that would be long type strategies or buy type strategies into a ongoing uptrend. So wait, be patient. I think that advice works on the put side, which is sell now. Or actually, I would say already have positions on. But the same thing would take place because the patience is key. And again, this is the S&P. We can go back to the spiders and the SPX. We are just looking for very short-term opportunities. And when a market is overbought or extended from any particular trend line or moving average, the next move of the market, I call those swings, tends to be to the downside. We can call that a pullback, a retracement, or a rubber band snapback. Whatever term you would like to use, it's a similar logic and similar play to what we have seen here. We quantify the market as being in an uptrend and being in an upswing, and the next move of the market, it can take time, but is to the downside. And again, that's going to play into levels such as 4,300 and the S&P down from 4,400. That's just a swing trade. That is not predicting a top. Not saying anything other than these other examples when the market retraced or that rubber band, think about holding a rubber band up here, snapped back. And the farther we stretch that rubber band, the faster and quicker it snaps back. That is on the S&P. And today's morning data were the CPI, the Consumer Price Index, hotter than expected, 5%. But looking beneath that, taking out oil and food, and the joke is what? You don't drive and you don't eat, but that is what the consumer confidence and the Consumer Price Index does measure. When you strip out or pull out or remove the volatility of oil and food. Nevertheless, the Nasdaq does continue its rally, and again, if you're putting trades on or are already positioned, it would be to the put side, because that's where we are now. The Nasdaq reached 15,000. I think it fell just a little bit shy of that in terms of the high of day. The high of day was 5 points shy. Splitting hairs here. 15,000 is the key level to watch in the Nasdaq, and the current pullback, retracement, rubber band snapback, and I'll put these others on the screen, takes us back to possibly, we'll go all the way to this blue line or a little bit beneath it, because that's what happened here. And the probability play takes us to about 14,200 or a little bit under that, maybe 14,000. Can that happen? It certainly can, because this is what occurred in the past. Nothing is guaranteed, but that is a setup, that is a trade, and if you're not already positioned, you missed the bull ride, and the play is to be defensive, protective, and shorting, or playing puts in the market for the short term. The Dow Mini Futures is back at the top of the range, and that is against 3,500. So that is the key level to watch as we plan for pullbacks, and that's against 35,000 in the Dow Mini Futures. And the Russell continues to be weak. Remember, Don and I refer to this as a type of volatility box where the upper resistance is 2350. Just putting levels for our plans. 2350, and forget this chart, it's on the left side of the daily chart, and about 2200 or 2150. Think of this as a volatility box, and the market, the Russell at least, the IWM or the small cap, is not making a series of highs and lows, but instead is consolidating. And that is what is in play. Now, it went ahead and played down away from the high, so that's the key play. In today's session, we had a strong reversal in the bond market. So let's start now, or move away from the equity market to talk about the bond market. This is TLT, and it does continue a downtrend, but we did highlight this 200-day simple, and that's about 149, just shy of 150, and that has resulted in a snapback or pullback. Now that's the same logic with which we're describing the S&P. Higher high, higher low, higher high, higher low, higher high, question mark, and the trade just becomes a short-term scalp to the downside. And that's been achieved. On the other side of the bond prices is the yield, and that caught an intraday bid in today's session. And that's what you might think if you saw inflation higher than expected. You'd expect the bond yield to go up. That was quite the delayed reaction in this morning's session. But let's pull to an intraday chart. We'll actually look at the 5-minute chart, and this is the day in terms of the CPI is hotter than expected. Yet the yields go down and the bond market goes up. Oh, wait, we got that wrong. And we saw the push, the higher gap, and this is intraday again. This is the yields. And 14 refers to 1.4, 15 refers to 1.5. And that is the 10-year Treasury yield. And as we look at that, that's what helped. Remember, the yields went down, then surged to the upside. The financial stocks, again, intraday chart, yields went down and then pushed to the lows and then surged up. So we still have that tale of two markets where the financial sector is tied to the yields. Yields fall, for the most part, financials fall. Yields surge or rise, for the most part, financials. And that played opposite the technology sector or the technology stocks. Actually, I'll just compare it this way. We can see a little bit clearer. And that's the theme going forward. So the TNX is the Treasury yield. Forget everything else on the chart. We had a gap down. We'll actually look at it this way. Right? This is the financial market, XLF. Down, up, down, down, up, down. Support, recovery, boost. And there is the recovery in the financials. But that is the exact opposite in the technology stocks. And that includes XLK or the Qs. Instead of a rally, the bond yields fell. The technology stocks got a boost. They went up, down, up. Because in the broader sense, financial stocks and technology companies want to borrow capital at low interest rates. Bank stocks, for the most part, want higher interest rates so that way they have a larger spread. So it's a very quick way to think about how yields are good for the banks short term and bad for technology stocks. The exact opposite dynamic took place. Remember, the XLK or the Q went up, down, up, down, up, down. And when we had that peak, when the yield started cresting to the upside, that is the exact point. And you can see it just about on a one-to-one basis here. When the technology stocks and the technology sector, and we can see it in the Qs, went lower. So that's something to be thinking about as you go forward in your trading plans and trading account and trading positions. How the yield bisects the financial market, that it's positively correlated and negatively correlated to the tech sector. Just think technology stocks want low rates, banks want higher rates, and we are very tied to that yield. That is the key factors in play. And even though we had it's a mixed day on Wall Street, the Russell was down almost 2%. The technology sector, or the XLK or the Nasdaq, was flat. The S&P skirted the middle, and that was down about 0.25% or almost 0.5%. And the Dow was down 0.25%. And as I always show, we'll finish the video tonight by talking about stocks making new 52-week highs. Some of the ones you may be familiar with, which include Apple, Microsoft, Amazon, Google, Visa, Adobe, Pepsi, Starbucks, Intuit, Target. And these are names that continue to pop up as stocks making new 52-week highs. They are strong. They are relative strength. They're helping pull the market to the upside, whereas the broader stocks or the broader market is, at least the Russell, is down. So we still have that separation. We still have sector strength and weakness, and that is creating a choppy environment. But these tech stocks continue to lead. That's why the Nasdaq is up at that 15,000 level, and the Russell is not. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for July 13th, 2021.